Good morning, everyone, and welcome back to NYSE TV Live. I'm Kristen Schiller here in studio at the Stock Exchange. Now, as the World Economic Forum comes to a close in Davos, Switzerland, one theme has been front and center. That's disruption. In fact, the incoming co-CEO of AlixPartners, David Garfield, sat down with me recently to share more about the firm's annual disruption index and takeaways on the ground. Let's take a listen.
AI is still a hot topic, but now I think people have really accepted that it's going to have a big impact on business. And there's a lot of discussion about the intersection of commercial AI and politics, how regulation is going to impact it, for example. There's, of course, a lot of discussion about the incoming or new U.S. administration and how that's going to impact trade around the world, and particularly between the U.S. and China. And then a lot of discussion about differences in approaches between countries, the U.S. vis-a-vis Europe.
I know AlixPartners just released its 2025 Disruption Index. What do you find as the most important or maybe even surprising takeaway from this year's index?
Yeah, so this year's study is really interesting. The results, I would say, are a little bit paradoxical. On the one hand, executives are saying that they're more disrupted than ever. And at the same time, they're less anxious about it. 67% of executives are saying that they are more disrupted over the last 12 months, but only 26% are saying that they're more anxious as a result. And the reason, when we dig into the data, is that organizations, companies really seem to be adapting. Their agility and their speed is up.
Certainly, to be successful these days, agility, I think, is key across the organization, but I'm sure for leaders as well. And according to this report, I see supply chain disruption has increased. What's behind that, and how do you suggest that companies respond?
Yeah, that's exactly right. So more than half of the executives who responded say that they are anticipating greater supply chain disruption in the next 12 months. And there are a few reasons for that. One is they're anticipating the impact, the potential impact of tariffs. So over 80% are saying that, in fact, they may have to make adjustments to their business strategy as a result of changes in trade flows. But also over 75% of respondents are saying that they're going to have to make changes to the physical footprint of their business, their manufacturing locations, and their supply lines as a result of escalating trade tensions between the U.S. and China.
Well, companies are focusing more on resilience than efficiency in supply chains, it seems, according to this report. What does that shift actually look like in practice?
Right. So what we see is companies trying to become more resilient three different ways. One is financial resilience. That's obviously where the equity and bond markets play a key role. So having the right structure in your balance sheet and having the right access to capital. We see companies trying to build organizational resilience into their business. So that is making sure that the management team and the wider workforce can actually adapt to all of these changes and disruptions. And then very importantly, as it relates to supply chain, we see companies building operational resilience into their business. And that means being able to deal with disruptions in the availability of supply, lead times, and of course, the costs of inputs, raw materials.
How are you finding that companies are handling risks tied to geopolitical pressures like reliance on China?
So companies are trying to diversify their supply base and shore up their supply base where they can. Of course, some of those moves take time and take capital. And so a lot of it is trying to hedge or mitigate the risks that come from having concentrated supply bases.
So for businesses that need to build flexibility into their supply chain strategies to handle this constant change, what's the best way to do that?
Well, the first thing is to really understand your own baseline conditions. What do you source from where? Where are you single sourced versus dual sourced? And also understanding the contours of the supply market. Where can you resource from? Where is there capacity and volume to source from? And what are the rules and regulations associated with those markets? Once you have the contours, the landscape defined, then understanding the business case for making changes, either nearshoring, reshoring, friendshoring, or just changing the underlying source of your inputs.
So what advice would you give to businesses as they prepare for the rest of this year, the next nearly 12 months?
The big thing that we find, and in our survey, we try to isolate the real superstar companies, the ones that are growing faster and are more profitable. And we look at their responses and some of the things that they're doing. And one of the things that differentiates the real winners is making decisions and taking actions at pace, even amidst all of the uncertainty. So I think a big piece of advice I would offer is, despite all the disruptions, you have to forge ahead. You have to make commitments to your customers, to your employees, to your suppliers, take action, and then be ready and able to adjust course as the conditions evolve.
Our thanks again to the incoming co-CEO of AlixPartners, sharing more about its annual disruption index.